All right, so welcome back to the Stockability YouTube channel. We're going to be discussing in this video part two of the GameStop and kind of short selling in the markets. So if this is your first time to the channel or you're returning to the channel, thanks for watching. We're going to be discussing a little bit about the saga this week in the markets. Obviously, if you haven't been involved in the markets or if you have been involved in the markets, there's a lot going on. So it's obviously interesting to see, what this fiasco is about. It makes it kind of exciting. It's the craziest thing I've ever witnessed in my 15 years of doing this. The last thing I could remember was Amaranth Advisors, was a natural gas hedge fund years ago that had something like this happen. But it's pretty crazy. So I'll talk about it briefly. So right now, the topic of short selling, short squeezes is pretty hot. So a lot of people don't like short sellers. For the past, I don't know, as long as I can think, it's kind of been this topic of being un-American to short sell companies. So we're going to kind of talk about that here in this video. So in my personal career back in the day, we did a lot of short selling, and some of you may or may not like this, against for-profit universities. Again, we'll talk about this in a webinar I'm going to discuss here on Tuesday. So let me talk a little bit about GameStop Part 2 and kind of talk about what's going on. I was going to try to make this video longer, but a lot of the dynamics in part one of the video earlier this week changed in this market. But I'll give you kind of an insight to what's kind of occurred. So essentially what happened is you had a massive short squeeze on this particular stock and massive buying. So what happened is a lot of money got injected into one of the largest hedge funds that was short this. Then recently of times what I've been seeing is looking at time and sales and the orders that are being bought. It looks like other hedge funds are attacking this position as well. So in the world of Wall Street, this happened again. If you want to research Amaranth Advisors, I'll talk about it in the webinar on Tuesday. When other hedge funds find out a hedge fund is positioned short, it's not uncommon to go after their short positions to essentially force them to buy it back at higher prices, therefore increasing the price of the underlying assets. Whether it's natural gas, whether it's GameStop, this type of thing has been occurring in the markets, and it's kind of a hedge fund tactic that's been occurring for years. It's just right now you're getting attention on it because the quote-unquote little guy, Wall Street bets, etc., is all over it. So I have opinions on it that I'll share later. I don't want to share them here on the channel. We'll talk about it in the webinar, but let me kind of talk about a few things, what I'm going to be discussing next Tuesday in the webinar. So when my career kind of started back to 2012 when I switched from futures trading to more equities trading, we did a lot of short selling. So obviously the markets this year, the way they move, it's really tough to short sell. Okay, so a lot of the dynamics of short selling in general are going to change after this. I still haven't even wrapped my head around what's happened this week to think clearly about how those dynamics change. However, there will be changes involved. So one of the ways I would typically short sell in markets is usually I'd sell call spreads against something or directional puts. The problem right now, and I'm going to show you on a few stocks, I'm going to go over Dillard's, for example. Let me just clear some of this up here. Dillard's, for example, is, the other day, this is one of the stocks that was also attacked by kind of Reddit, right? They were kind of after this. It caused a short squeeze. So one of the problems you see, and a lot of you are new to options trading and trading in markets, is a lot of you just want to buy directional puts on stocks and basically bet against them, okay? The problem is the market makers, they're smarter than that, okay? So I wanted to come in and kind of short this yesterday. The issue is, if you notice, there's no volume on these contracts, and number two, the spread is basically $400, $500, $600 wide. What that means is, if I were to come and buy this at market at 1680, it'll be instantly quoted at 12 for the most part, right? So I'd have a net paper loss in theory around $480, give or take, right? So that's kind of the issue you face with this. The other issue is as markets dynamics change, these firms, Interactive Brokers, Schwab, TD, especially right now what's going on with Robinhood, what they charge you to borrow the shares to short changes, okay? So a lot of those dynamics change. And again, short selling, when you're using shares, it is complex. It's an interesting kind of dynamic to get into, and I would consider it legitimately, and I don't try to put too much weight on a lot of financial topics, but short selling is a sophisticated thing to do. I don't think directional call planning, that's what I do a lot of, or futures is too sophisticated, but short selling, you kind of got to understand the dynamics and market mechanics of short selling in markets, okay? So it's not as simple as just, hey, I'm going to go buy a put and I'm short this company, right? There's a lot of things that go into that, and I'm going to discuss that in the webinar on Tuesday. So this is one of the stocks I ended up wanting to short. What else they did as well, I'll take a look at another one, Mesa Rich. This was basically another stock that was owned by Melvin Capital. They ran this thing up. really had no other reason that they just ran it up. So it is interesting to see this, and we're going to talk about it in the webinar Tuesday. So I'll go back to GameStop here briefly to discuss a few things. I know I talked about it in part one of this video, but I'll talk about it here again. So what has happened today and this week has really never happened at all. So what you're seeing now is basically forced selling on this. Okay, so for better or worse, Robinhood, Interactive Brokers, I can't even place trades on this right now to get put options or to sell call spreads on this. Merrill Edge, I just literally looked at the messages and recording this, has canceled any new orders on this. Okay, so even if you wanted to come in and bet against this with put options or to sell calls or call spreads, you just can't do it. So there's a lot of things that have happened this week that are going to change dynamics of short selling in markets and how things operate. Okay, so we're going to discuss this in a lot of detail next week in this webinar to talk about short selling and the mechanics. So I kind of want to invite you guys to that. So again, I'll continue this discussion in the webinar next week. If you want to sign up for it, real simply put, it's on our website. Let me bring it here for you. If you go to the main website, stockability.com, at the very bottom, you can sign up right here at the bottom, short selling mechanics. So I'm going to put this on for about an hour. It's next Tuesday at 1:30 p.m. Eastern. I'm going to go through and explain to you the mechanics of short selling. So I'm going to use this case study of GameStop. I'm going to direct you to another case study, a white paper you can look at on Amaranth Advisors, and I'm going to talk to you about different ways to look at short selling in markets from different perspectives. So whether that means, let's say a certain sector you want to short, but the bar was too expensive on one stock, I'm going to show you a different way to look at a proxy to short that same kind of sector through a different concept. So I'm going to be explaining this next Wednesday. If you want to sign up, it's free to attend. It'll be about an hour and 15 minutes, depending. I'm going to go through some slide decks and explain to you kind of how that works. So all of you are interested. It's a hot topic right now. I hope to see a lot of you there. Sign up on the website. I'll see you guys next Tuesday. Let me digest what happened this week on GameStop, because again, it's been a hectic week for me in markets trading. And once that's done, I'll probably also be writing part 2 in the short selling blog posts that I'll do. So again, everybody have a good week. Stay safe out there, and we'll see you next Tuesday in the webinar.